Assalamualaikum. My name is Puteri Nur Ayuni binti Syahri. My metric number is 308661.
Hi, my name is Maisara binti Amrai. My metric number is 308698.
Assalamualaikum. My name is Fikri bin Muhammad Idris. My metric number is 313524.
Hi, my name is Muhammad Junaid Zahid and my metric number is 313450.
For the first company is Binastra Corporation Berhad. Binastra Corporation Berhad origins and listing. This company was established in 2003 as Comintan. This company listed on Bursa Malaysia since 2004 and rebranded in 2024. This company core business is an investment holding company with a core focus on construction services and property development. This company key capability holds a CIDB G7 classification, enabling it to undertake large-scale high-rise projects. This company's strategic vision is to be a leading, trusted builder in Malaysia. Mission and focus is to deliver reliable, high-quality projects with an emphasis on safety, professionalism, and timely delivery. For the second company is Berjaya Food Berhad. Berjaya Food Berhad incorporated in 2009, converted and listed on the main market of Bursa Malaysia in 2011. Berjaya Food Berhad core business is an investment holding company with a core focus on operating and franchising food and beverage brands. Key portfolio wholly owned owner of Starbucks Malaysia and the Kenny Rogers roster chain. This company's strategic vision to be a leading and dynamic food and beverage group. The main mission of this company is expanding its brand portfolio through strategic acquisition, joint ventures and divestments.
Next is a ratio analysis. First is liquidity ratio and a current ratio. To get a current ratio, current asset need to divide with current liabilities. Current ratio for Binastra is a 1.35. The company has a good short-term financial health. For every 1 ringgit of current liabilities, it has 1 ringgit 35 cent of current asset. This indicates a comfortable buffer and a strong ability to meet its short-term obligation without significant strain. For Berjaya Food current ratio is 0.30. The company is in a precarious liquidity position. For every 1 ringgit of current liabilities, it has only 30 cent ringgit of current assets. This signals a high risk of default on its short-term debts. The company may need to sell long-term assets. Next is a quick ratio. To get a quick ratio, we need to divide a quick asset and current liability. So that has been 1.35. Indicate for Binastra has 1.35 cent liquid asset for every 1 ringgit for short-term liabilities. This shows the company in a comfortable short-term liquidity position as it can meet its immediate obligation without relying on the sales of inventory. For a Berjaya Food Corporation, this ratio shows that Berjaya Food only has 12 cents of liquid asset for every 1 ringgit of current liabilities. This indicates a very weak liquidity position, meaning the company may struggle to meet a short-term obligation without selling inventory or obtaining additional. Next is total asset turnover. To get a total asset turnover, we need to divide net sale and average total asset. A total asset turnover of 2.20 time means Binastra generate 2.20 ringgit in revenue for every 1 ringgit of asset. This indicates efficient use of asset, showing the company is effective at converting its asset base into sales. Next is a total asset turnover of 0.70 means the company of Berjaya Food generate 70 cents in every 1 ringgit invested in total asset. This reflects moderate efficiencies in asset utilization, suggesting that the company is generating revenue reasonably well, but still has a room to improve asset productivity. Next is account receivable turnover. To get an account receivable turnover, we need to divide a net sales and average trade receivable. Account receivable turnover of 2.79 times per year suggests that Binasra collect payment from customer roughly every 131 days. This turnover rate is low for a construction-based business, indicating that a large portion of revenue remain tied up in receivable for a long period. The account receivable turnover of 10.5 times indicate that Berjaya would collect its receivable efficiently throughout the year. This demonstrates strong credit management as the company can convert credit sale into cash quickly, supporting healthier cash flow.
I will now continue our analysis by delving into two critical categories of financial performance, which is profitability ratio and leverage ratio. We will examine this for both Berjaya Food Berhad and also Binasra Corporation Berhad. Let's first look at how effectively these companies are turning their sales into a profit and generating returns for shareholders. So for the Berjaya Food Berhad, profit margin on sales record a severely negative, which is negative 60.06%. This isn't just a lack of profit, it means the company is losing around 60 cents in every 1 ringgit of sales. This highlights a major operational weakness in 2025. And for the return on common shareholders equity, it's an equally alarming around negative 114.7%. This huge negative figure is a result of the company's substantial loss, which dramatically deplete equity. For shareholders, this represents a significant disruption. Now, let's look at the contrast with Binasra Corporation Berhad. So for the profit margin on sales for Binasra reports a healthy positive, which is 9.53%. This means the company is successfully converting 9.53 cents of every 1 ringgit in sales into net profit, indicating sound operationally efficiency. So for return on common shareholders equity, Binasra achieved a strong 31.65% ROE. This demonstrates that the company is effectively utilizing shareholder capital, generating 31.65% returns on shareholder. The profitability comparison is clear, showing Binasra is far stronger in a position. We now shift to leverage ratio to assess their financial risk and reliance on debt. So for the leverage ratio, it tells us that extent to which a company uses debt to finance its assets, which is a key measure of financial risk. So for the Berjaya Food Berhad, debt to asset ratio is around 89.5%. This indicates that nearly 9 out of every 10 ringgits of assets are financed by debt. This is an extremely high reliance of external creditors. So for debt to equity ratio, the ratio is around 8.49. This means Berjaya Food carries around RM8.49 of debt for every 1 ringgit of equity. This is a major red flag indicating a very high financial risk and a structure that is overwhelming debt heavy. Now let's examine on Binasra Corporation leverage. So for the debt to assets ratio, Binasra ratio is around 61.4%. About 61% of its assets are debt finance, which is considered moderate to high leverage. It shows significant reliance on borrowing, but it's manageable. So for the debt to equity ratio, this ratio is around 1.59. So the company has around RM1.59 debt for every 1 ringgit of equity. While indicating significant external financing, it provides a much healthier and more balanced capital structure compared to Berjaya Food.
Okay, now let's compare each ratio between Binasra Corporation Berhad and Berjaya Food Berhad. First, we use the current ratio. Binasra Corporation Berhad is at 1.35, while Berjaya Food Berhad is at 0.30. This means Binastra has a much stronger liquidity position than indicate a better ability to cover short-term liabilities. The quick ratio tells a similar story. Binastra Corporation Berhad is at 1.35 and Berjaya Food Berhad is at 0.12. This means Binastra is significantly more liquid even without inventory considered. Now is for efficiency. The total asset turnover for Binastra Corporation Berhad is 0.20 and for Berjaya Food Berhad is 0.70. This means Binastra use more assets efficiently to generate revenue. However, Binastra does one thing better. Look at the account receivable turnover. Berjaya Food Berhad is at 10.51, is higher than Binastra Corporation Berhad is at 2.79. This means Berjaya Food Berhad collects receivable much faster and indicate strong credit control or cash-based sales.
For the profitability ratios, we compare Binastra Corporation and Berjaya Food. Firstly, for the profit margin on sales, Binastra recorded a positive margin of 9.53%, while Berjaya Food showed a very weak performance with a negative margin of negative 60.06%. This means Berjaya Food loses about 60 cents for every 1 ringgit of sales. Next, for return on common shareholders' equity, Binastra again performed strongly with 31.95%. In contrast, Berjaya Food recorded a highly negative ROE of negative 114.70%, indicating major losses and a significant drop in shareholders' value. For the leverage ratios, we look at debt to assets and debt to equity. For debt to assets, Binastra has 91.40%, while Berjaya Food is higher at 89.50%. This shows Berjaya Foods depends more on debt financing. For debt to equity, Binastra recorded a ratio of 1.59 compared to Berjaya Foods' extremely high ratio of 8.49. This indicates that Berjaya Food carries very high financing risk due to its heavy reliance on debt. Based on the financial analysis, here are the suggested strategies for each company. For Binastra Corporation Berhad, the main goal is to improve cash flow. The company is healthy and profitable, but it collects receivables slowly. To improve, Binastra can tighten credit terms, offer discounts for yearly payments, and use automated invoicing. These steps will help speed up cash collection and support future growth. Berjaya Food Berhad faces a bigger challenge, becoming profitable and surviving. The company is heavily in debt and losing money on every sales. To fix this, it needs to cut unnecessary costs, restructure its debts, and review its operations to stop losses and stabilize the business. In short, Binastra should be fine-tuned its strengths and performance, while Berjaya Foods need urgent change to regain stability and competitively.